Hi guys, how you all doing? I'm good myself, and today is Sunday, and on Sundays usually I give you some chats that you can take advantage of, during from Monday until Friday. So today I got a request from Ubandi saying that he asked me to look at VIX 75. So make sure that if you're new here, make sure that you subscribe and then you hit the bell icon, and also stay with me until the end, because I'm gonna start with VIX 75 being our first chart for today, and then I'm still gonna do maybe US 30 or Nasdaq for today. So let's get started with VIX 75. He's saying it doesn't know what's happening around the daily resistance, but it's fine. Let's start at the top. Remember, we did monthly not so long ago. We still know where it is, because we don't expect much. Okay, my network is. We don't expect much of a. How can I put this? Of a difference, because of what? It's a daily. I mean, it's a monthly chart, obviously. So like the price action from 1 week won't change the structure that much on a monthly chart, because on monthly, if you still remember, this was the initial setup talking about okay, let's just make it black. We were saying on monthly, we had a monthly trend line there, bullish one, and the price was approaching it when I said anywhere from inside this monthly area of support you were allowed to buy, simply because we are having a bullish trend line and we have a very nice support that gave us the all-time high. I'm talking about this. This is the highest price VIX 75 has ever reached. And we got it from what? The price that started by this support and went all the way up. So which is why I said you can take it from there until you hit the opposite structure. You can see now we're hitting the opposite area, but it hasn't done much. It hasn't done much, this one. But yeah, it's the opposite area. So that's all that we're having on monthly. So we won't have a lot of differences in terms of the initial setups that we had. But that's how you're supposed to check the charts. Every time you open the chart, you must just check if there's anything new, right? So on weekly, the price, remember that monthly zone that we spoke about. This is something that I've been doing, I don't know for how long now. We had a nice weekly support here inside that monthly that we spoke about, which is where you've gotten your first trades, and then it went up, and then we were worried about. Okay, I think now that you see what I'm talking about, I can remove it. And we were worried about the trend line and said that the price might struggle to break the trend line, of which it did. But now it seems like the trend line has been completely violated. I'll show you the trend line that I'm talking about. So this is the support on weekly, and the trend line that I was referring to was this one. If you still remember the videos that I made, was this one, to say that the one that pushed the price all the way down to the monthly area of support. It left like a trend line here, and it was. Last week it was confirmed, it's broken. It's broken because of what? We moved up and then we had this one, but if it wasn't closed, then we don't have a breakout. You can see they tried their best to push it down and left that the bearish rejection candlestick, but it didn't do much. It didn't do much. Yes, we understand that the area hasn't been sort of violated, but in terms of the trend line has been violated. You can see that the bulls on this weekly chart, they are the ones that are much stronger than the bears, but the way they moved the bulls until it was just one move to the upside, so they can maybe have a pullback before taking off, but we'll see what's happening on the other time frames. But the reason why we are leaning more towards them is because even on monthly we saw that it's all about the bulls. And even here, the bears tried to come back with the rejection candlestick from their area of resistance, but they still got defeated because that rejection candlestick, the price moved above it, but they are not yet fully out or fully defeated because of what? Their resistance hasn't been broken. But based on what we are seeing here, they might lose, but because they went up, but because we need to keep in mind also, they went up with a very strong move, and the price, it's not supposed to move straight like that. When the momentum is sharp like that, you need to be careful, because even the way it's gonna drop, it might just, you see. But if it's moving nicely, kokamoya, moving like that, one impulse pull back, one impulse pull back, this might be impulse and then pull back, impulse pull back. You get what I'm saying? All right, let's move on to daily and see what's happening. I think this is the chart that Bandile was referring to when he said that he doesn't know what's happening. And we know this is how can I put this? This is that weekly trend line, bearish trend line, and we said it has been broken. And when we were going down, the daily trend line was here. We could put it somewhere there. We could put it here. You could put it there, and it is not yet broken. And this was the area of resistance. This one here, it's the area of resistance. This one. The price is still inside the area of resistance. It is still around that daily bearish trend line, but you can see it's making higher highs. Still, it's making higher highs. So meaning this is the bullish trend line on daily, and there you have the bearish trend line. The price is, sort of moving in between the two. But as long as it's moving to the left, to the right, it's going to break one of the two. And this is our nearest support on daily. So if you were to get trades, maybe you can push it until somewhere there, but we're not saying it has to break that. We know, we said on weekly that the movement to the upside was very smooth, and it might have a pullback. But in terms of a pullback, the tricky part is that no one knows where it's gonna end, you see. So which means if you manage to get a trade when the price is pulling back, or any trade that you manage to get, make sure that when the price hits the opposite zone, you see, if you're holding a sell and the price hits a support or a bullish trend line, you need to exit, because that's not your thing. That doesn't go with the trade that you're holding. You're holding a trade that says bears or bearish, but you're hitting an area that says there's a lot of bulls here, which is a support. There's a lot of bulls, which means the support can hold, and then those bulls can push the price back up. You see, that's how you're supposed to exit your trades, so that when the bulls and the bears are fighting, you are not part of that. You just took your profits. You're just watching whoever wins. You're going to search for trades in that direction of the person that won. If it's the bulls, you're going to search for buying trades after the level has been violated. It's the same thing here. If you're trading, because remember, this is still a big time frame, it's still a daily. So if this daily it breaks the support, the resistance, it means it has a higher room, higher chances of going up until the next opposing zone. So you can still buy in that direction. But if the price drops and then it comes down, maybe it breaks the bullish trend line, or it breaks that support, then the bears have a chance of pulling all the way back. But it might not go all the way down, but they have a chance of extending their pullback before taking off again. You see? So it all depends on who is winning, and you don't have to predict who is going to win. Here is a very critical area. And also keep in mind that the bears, also one thing that is against them is that this level here, number one, we know that when a zone or a trend line is being tested many times, it becomes weak. We don't know when it's going to be broken, but it becomes weak. So this trend line here, it was joined like that, and then this was the third touch. It went down. This is where, remember, I had the trades, and then it's just that recently they've been taken out. That one trade that was running, we said when we were taking this one, we said we are targeting the opposite zone, which is this. And at the time, the trend line was still here. At the time when we were taking those trades, I want to show you why I'm always saying exit at the next opposing zone. So we are targeting this opposing zone here, or this area of support, or the trend line, whichever one is hit first, because both of them, they are saying bullish, bullish, bullish. And if I'm holding a bearish trade, if the price hits this support, I'm out. Or if it hits the trend line, I'm out. Because both those structures, they are bullish structures, and I'm holding a bearish trade. So that's why I don't have to fight them. Yes, my trade can just go and violate the trend line and then continue pushing down, and then I'll be happy. But I don't know for sure if it's going to do that, which is why I take what the market gave me, which is why I took that. So when it touched the trend line, I was like, okay, I'm out. You see, now we are at a very critical area. So that's where I'm like, let me exit my two trades, and then I'll just leave one running, just below the break even, and then I'll see what happens. If it breaks, I'll be in the trade. If it comes back and take me out, it's fine. That was not my main trade. You see? So that's why I always tell you that you need to make sure that at the opposite structure you exit. You don't have to predict what's gonna happen there. Yes, you can predict and get it right, but you shouldn't play like that. You shouldn't play like that, because it will be like you were watching your profit doing well here, only for the price to go up and hit you with a small profit after seeing such a big profit, you see. So you need to exit, unless if you've got more than one trade, then you can just leave that one. It's just like you're just leaving it there. Even if it hits you, that was not your main trade. The main trades are out. So the same thing, if the price gets here, you are out. So still saying that the more a level is tested, or the more a trend line is tested, it becomes weak. So the trend line, it was tested here, tested there, but this one we can't count, because this is the one that gave us the trend line. I mean, we can't say this is the first touch. This is nothing. These two, they don't count. We don't count them as a pull back to the trend line, because without them you didn't have a trend line. So you start here. This was more like a first pullback to the trend line, and then we have a second one. So you can see that it's been tested more than once. Usually is the first one that is strong. Usually is the first one that is strong, and from there the price might how can I put this, it might break it, but we don't know. We're just saying it becomes weak. The same with the level. This is the level. It was formed here. This is not the first touch of the level. The level was formed here. This was the first touch. This is the second touch, and now we are doing the third touch of the same level. And you can see the third touch has pushed the price even higher than the first two touches, which means the bulls now, they are really having like a third attempt to break that level. But until they break it and break even that trend line, we are not gonna say that they will break it. We will see. We'll see. But remember, this one, we broke what? We broke the trend line, but we're still inside the level of resistance there. So the price can push in either direction. So if it pushes up and break those key areas there, then it opens a very huge room to the upside. But you can still search for trades to go short if you get a reason to go short, simply because of where we are, and the move on weekly was also not. It was like one straight move to the upside until it hits the opposing level that we've been predicting for so many weeks. I think third week now. When was it? But it's fine. It's not this one. I think that was Nasdaq or so. I'm thinking of something else. But it's fine. We hit the opposite area, but and the more it's bouncing here, it might break it, but we don't know. We don't know. Let's go and check what's happening here. So in terms of the H4 trend line, we still have the same one, because we never had another move to the upside around here. So I hope you can see Mr. Bundle in terms of the price action around it there. So let's remove this. Yes. So if I'm trading, let's say H4, right? We know that we are inside the daily area of resistance, like we saw on the analysis that he made on daily, which is this zone here, this big level here. We can remove the trend line for now. Yes, so this is the daily level, and we have a nice H4 that I just marked with the horizontal line. This is the nice H4 inside that daily. So now let's see what the price did. We know the price is still inside the daily. We know this is daily, and once it hit that H4, it got rejected. So now it's only a matter of saying, is it gonna go all the way down here? Oh yes, look at this nice zone here. Look at this nice zone here. So this one here, this one here, this is an H4 level, the same way which is an H4 around the daily level, the same way we had this H4 resistance inside the daily level. So the price, if it comes down here, if you get a resistance to sell, I don't know what you're going to look for, because already the price has moved. I'm also not interested in that. So if it comes down here, and it gives you maybe rejection candlesticks or an engulfing on your execution time frames, you can hope that it will go up back to the H4 level, because we don't want to say back up and take out the level, because it hasn't been broken yet. So it can still hold. It can hold 100 times. Yes, we are saying the more it's tested, the weaker it gets, but we are not saying it has to be violated now. It is going to be violated now, you see. So that's why even if you're to get a trade here, when it gets up there, you are still out. If you get something here, when you get to this, you are out. You don't say this is going to be broken. No one knows that, which is why you just target the opposite, the nearest opposite one. If the space between where you are or trying to sell or trying to buy to the opposite zone, the profit margin is big enough, then you are fine. You can take that and go and exit there. Unless if you're trading, bigger time frames like weekly. When you're trading weekly, it means if you were buying here, you will only be targeting what we spoke about today. You see, anything that happens in between on smaller time frames, all the pullbacks that were there on the smaller time frames, they were just, they didn't cause anything on your thing because you're trading the larger time frames. But if you're trading these ones, the next opposite level should start from there and move up into the higher time frames as well. So if I'm trading H4 next opposing level is something I should consider, and daily and weekly going up. But H1 won't change the structure on my thing that much. So it's only the bigger time frames that I'm worried about. So that's basically all that you can expect, Mr. Bandila. I hope that you can see. It shouldn't confuse you. The level is still active because you're saying that you don't know what the price is doing there around that resistance. No one knows if the resistance is going to hold or not. It will all depend on the structure that the price gives you when it is inside that level. Then you can decide if it has higher chances of dropping or going up and breaking it. You see, you must let the market or the price show you what it wants to do, and then you join that movement. You don't predict and tell it what to do, especially around the key areas. You don't tell the price to break a 10-9, or you don't tell it to break a level. You're going to be disappointed if you trade and place your take profits all the way above maybe an area of resistance or above a trend line and say it's gonna break all of them and go to your take profit. Yes, it can do that, but most of the time you're going to be very disappointed after watching all the profit the price gave you when it hits that level, and you are like, no, it has to break it. If it comes down and take you out at break even, imagine all that profit is gone, of which you knew that there was a level there. So why don't you be worried and say, what if this level holds? Then it means the price is going to come back and take me out. So because of that, I need to make sure that I make this my first TP. That's how you're supposed to trade. So I hope this is going to help you, Mr. Bandile, and everyone that's here. And if you're new here, there are guys that have been here for a while now. These are the type of videos that I'm always making, right? And for those ones that are new, make sure that you subscribe and follow the channel, because this is the type of content that I post to this side. And there are those that are in the mentorship as well, and yeah, this is what I'm teaching them. So if you are interested to learn this type of stuff from me, have one-on-one sessions, group sessions, you're more than welcome to leave a comment, and then I'll get back to you. Yeah, all in all, this is what you can expect from VIX 75, guys. I'll see you in the next one, which is probably going to be US 30. All right, sharp.